What if I told you there's a tiny AI stocks today that could one day stand toe-to-toe with Google, and it's trading at a price cheaper than your morning coffee? Sounds insane, right? But here's the shocking part. The story doesn't stop there. Because in this video I'm also going to reveal an AI stock under $3 that has a business model so bold, some analysts believe it could reshape how we search, learn, and even trust online information. Trust me, stock number one will leave you speechless, so don't go anywhere. Google is worth over $2 trillion, and for decades it has been the king of search and online information. But history tells us something important. Every giant eventually faces disruption. Remember when Yahoo dominated search? Or when Nokia ruled phones? They all looked untouchable until a small, scrappy competitor flipped the script. That's the opportunity we're talking about today. Two stocks under $3 that are not just surviving in the age of artificial intelligence, but trying to take a bite out of Google's empire. These aren't safe blue chips. They're high-risk, high-reward microcaps, but sometimes that's where the biggest opportunities hide. Before we dive in, if you're excited to uncover hidden gems like these, do me a favor. Hit that like button. Let's see if we can smash through 500 likes on this video. It really helps this channel keep digging up these under-the-radar plays. All right, let's jump straight into our first company of the day, Nerdy Inc. Okay, ticker symbol NRDY on the NYSE. This is the stock I teased in the title, and it trades right now at just about 137. Nerdy is behind the Varsity Tutors platform, and more importantly, it has rolled out something called Live Plus AI. This isn't just another tutoring service. It's a hybrid of real human tutors plus AI-powered interactive learning, which has the potential to pull millions of students away from traditional search engines like Google. Think about how most students use Google. They type in a math problem or a science question and get a bunch of links. But with Nerdy's platform, the experience is completely different. Instead of sifting through websites, a student can interact with an AI tutor that guides them step by step, almost like having a teacher in the room. That's an entirely new way of learning, and it's exactly the kind of behavior shift that can erode Google's dominance in knowledge and information. The numbers back it up. According to recent quarterly reports, Nerdy has shown strong engagement growth, with families increasingly turning to their platform. Revenue is climbing, and while the company isn't profitable yet, they're doubling down on AI investments. Their thesis is simple. If learning moves from passive search to interactive AI, Google loses ground, and companies like Nerdy gain it. And here's what makes NRDY exciting for investors. It already has brand recognition through Varsity Tutors, national reach, and a unique product positioning. Analysts have noted that Nerdy is carving out a niche in education that Google has struggled to dominate. Sure, this is still a speculative microcap, but that's what makes it interesting. If Nerdy succeeds, it could become the go-to platform for AI-driven learning, a category that could grow into billions over the next decade. At $1.37 a share, that's the kind of asymmetric bet that penny stock hunters live for. Now, before we wrap up, let's talk about stock number one, the real wild card. This company trades for just a few cents, and it's aiming straight at one of Google's most ambitious but troubled bets, healthcare AI. Think about it. Google has spent billions trying to push into healthcare with projects like DeepMind and Google Health. Yet progress has been slow, controversial, and in many cases, hospitals and doctors are still hesitant to rely on Google's systems. That leaves a gap. And sometimes it's the smaller, specialized players who move faster and win trust in these sensitive industries. This company is focused exactly on that gap. It's rolling out AI-driven platforms for patient monitoring, medical data analytics, and predictive diagnostics. In healthcare, trust always beats brand. If hospitals and clinics find a smaller company's AI tools more reliable than Google's, even a microcap can carve out meaningful market share. Financially, this is the definition of a high-risk play. We're talking about a stock trading at just a few pennies, with all the volatility and liquidity issues you'd expect from an ultra-microcap. But here's the kicker. In asymmetric bets like this, it only takes one breakthrough contract, one strategic partnership, or even an acquisition to completely change the story and the stock price. So which company is it? The name is AIML Innovations, ticker AIMLF on the OTC markets, trading right now around $0 It's tiny, it's risky, but it's playing in a space where even Google has struggled. So there you have it, Nerdy Inc. at $1.37 and AIML Innovations at 0.3. Two AI stocks under $3 that could, in very different ways, nibble at Google's empire. Remember, these are high-risk, high-reward plays. They're not guarantees, but sometimes the biggest wins come from the corners nobody's paying attention to.